what's affecting Canada with tariffs is changing by the day. Where we stand today is that number one, there are tariffs on many goods that are not USMCA compliant. That leaves actually only about 5 or 10% of our goods selling to the US is actually affected by these tariffs we hear about, because the rest is USMCA compliant and 0% tariffs. The second is also sectorial tariffs, or essentially Section 232, which is affecting Canada. That is also obviously a focus in affecting aluminum, steel, and autos. And then lastly is the USMCA agreement themselves. So you can see where the Canadian government is looking at many different levels here to solve this. And how they want to solve it, of course, in the short term is potentially lower the sectorial tariffs, lower tariffs outside of USMCA, but they also are probably discussing the USMCA, which could be ended with a 6-month notice, and the U.S. administration has publicly said they will look into it next summer. So that is probably the bigger issue here for Canada, less on the actual current concerns of tariffs. They're all a concern, but if that USMCA gets renegotiated, maybe we don't have 0% tariffs and we have higher tariffs. So it's something the Canadian government obviously has to negotiate properly to make sure we're okay with. Which sectors could be affected most in the recent tariff announcement? As mentioned, some of the more sensitive ones would be the ones that have effect right now with Section 232, which would be autos, steel, aluminum, and lumber have been recently affected as well. These sectors here are a key part of jobs, and that is the tough thing with here in negotiating with the U.S. The U.S. has brought up many times before there's certain sectors they would like to see jobs come back to the U.S., and many of these sectors are the sectors they mentioned, but of course they're jobs for us as well. And yes, thankfully, the Canadian government is speaking about helping these industries and providing short-term benefits, but longer term we need to find a better solution, because again, for Canada, we need to have proper trade with our partners. And these tariffs can be very punitive. So the sectors overall are that first level of concern. The second level, though, is the USMCA. We have to watch that all sectors could be affected to some degree if they're selling goods to the US. That is more of a view going forward, but I'm sure it's a concern for the Canadian government and all of us as Canadians to make sure the USMCA is properly negotiated. And the assumption that we'll have 0% tariffs may be a lower probability right now when you see almost every other major country paying at least 10% tariffs, and of course varying degrees above them. And at a high level, what might be impacting the portfolio? Luckily, working at Fidelity, we have the competitive advantage of our team here. We were doing a lot of work even before the US election to see what scenarios could happen depending on who would win the US government. And so running those scenarios, we did, number one, a lot of sensitivity analysis to say, where are the upside, downside, what are the possible scenarios. Number two, we were analytical, not emotional. You do not get emotional with politics. And number three is we're just trying to be very pragmatic. The situation can change daily, so you have to be able to adjust and react. So we've limited certain parts that we call the blue part of the flame. And the blue part of the flame is the hottest part of the flame. And so again, going back to the US administration, what areas were they talking about even before the election was one, about jobs and sensitivities. And it would be involving steel, aluminum, dairy, any manufacturing jobs are a big thing and focus for U.S. administration to bring back to the U.S. So those are areas where we adjust in the portfolio and try to limit exposures if we can, but also reminding the audience, there's lots of great companies that sell globally, not just the U.S. They also sell the U.S., but they may sell software, they may sell services, and there's many great companies that sell within Canada as well. So it's the actual portfolio itself can be adjusted with still giving a large impact to the Canadian market. And again, it goes back to where we're just leaning on this very variable environment is our competitive advantage of the size and quality of our investment team. Again, 400 investment professionals working on your behalf. I hope you have a great day. I appreciate your time.